there is four issues which I thought is a danger for Ethiopian financial sectors at the moment. Those are primarily, the first one is low capitalization. Because the biggest bank in Ethiopia in dollar term is less than $200 million, which is, just mock the idea. Any Euro millionaire winner can buy it. That means it. The second was low level of, too small. Now anybody can buy these banks. As particularly the current currency devaluation has made all assets in Ethiopia very cheap, which is, the World Bank strategy of, acquiring all this assets cheaply on behalf of, the bank investor. So low technological level is just, we have to be, compare ourselves not with the core banking sort of things, compared with Kenya and Hargeisa. In Hargeisa, it's almost everything is now digital. Even, you pay directly to people who are begging through their mobile phone, the shoe shiners and everything. So the level of, if we look at M-Pesa now, at the moment, they have 51 million customers, about 340 billion in transaction per year, 640 active agents, 640,000 active agents in Democratic Republic of Congo, Egypt, Ghana, Kenya, Lesotho, Mozambique, and Tanzania. But if we compare it, Ember and then M-Pesa, they had only 2 years difference. M-Pesa was established in 2007, Ember was 2009. But now you can see the difference, the technological difference, the capital, and then everything. So that is a biggest challenge. In one of on a final statement I made for the management of the bank is, we don't have to be comfortable with our position, because the danger is coming. That's why we have to be very careful. What I said, avoid the knowledge and power illusion. The biggest bank in Ethiopia, I could be very proud of it, but it's not even competing with the smallest bank in Kenya. So that's the issue, the first issue. Yeah. So apologies. Yeah. So again, we could have gone through digitalization. The solution, which a recommendation was the three category group of people for shareholders. Now this is time to wake up. You cannot control like a cartel and then wait to face the biggest challenge. The biggest challenge for the shareholders also retention strategy, because Richard told us the moment in the new bank come, the salaries will double, all the expertise will live, and then that will be the best people will be. So it's like share option strategies, retention, long-term, bankers. And then also we have, we do business, not politics. Now all the political, ideology is in the bank now. So, the recruitment, the lending, and everything is more of it just follow the political structure. This cannot stand the coming challenge. So we need to have require hire the best people in the industry, and then also we have to increase our not geographical location. We should be able to go into new areas. For management, avoid the knowledge and power illusion. Change management is now, this is time, which kind of, I want to create, the house is on fire, kind of strategy. We're going to have face a big challenge now when we're going to start changing. Of course, the, virtualization and digitalization, it is already begin now. It's recently, about probably 6 months, the first fintech company had a license. But in Kenya, it's 2007, they have been operating. So when we talk about, in relative terms, we have to be comparing with other group of, so to push the government, the most important things now, the bank need to do is stock market, because under current situation, your share is sold 1.5. Your asset is huge, but people buy your share. So that could be 4 or 5 times multiple. You can recapitalize the company value, if you get the real value of your asset into shares. So that's what the big issue. It's been pushed the stock market for some reason, but hopefully when they come and then when the companies, banks float, it will also create an opportunity for bigger banks to take the smallest bank, just hostile takeover. They make an offer to shareholders and get for national bank. It was excellent. regulation in terms of things, because in 2017, presentation, I brought about 80 billion worth of share was sold. Only 30 billion was in the stock market, in the financial sector. The 50 billion is unaccounted. Except a few companies, most share companies are bankrupt. So a lot of wealth has been destroyed. Open for new ideas. It's now the National Bank has to hire people from abroad, from India, from Nairobi, and then learn a practical example. And then, so far, the relationship between the banks and the regulatory bodies, like Machiavellian fear, rather than collaboration and working on the things. These are the things we need to do